There is a waterway in the Persian Gulf between the southern coast of Iran and the northern tip of Oman that measures 21 nautical miles at its narrowest point, not 21 miles of open ocean, not 21 miles of contested international waters with multiple navigable corridors, 21 nautical miles divided into 2 shipping lanes, each 2 miles wide, separated by a 2-mile median zone, through which on any given day, between 17 and 21 million barrels of crude oil transit, the global economy, the Strait of Hormuz, the single choke point through which 30% of the world's seaborne oil passes every day, the geography that every energy economist, every naval strategist, every central bank governor in Frankfurt, Tokyo, Beijing, and Washington has run wargame scenarios about for 40 years without ever expecting to see the scenario run in real life. On Thursday, March 5, 2026, the IRGC Navy, Iran's Islamic Revolutionary Guard Corps naval force, deployed a combination of Noor anti-ship cruise missiles launched from Abu Musa Island, contact mines laid across the eastern shipping lane of the strait, and College Farce ballistic anti-ship missiles fired from coastal batteries near Bandar Abbas, simultaneously, within a 90-minute window, targeting 4 commercial tankers, transiting the Hormuz inbound corridor, and issuing a formal closure declaration broadcast on Maritime Channel 16 to all vessels within 200 nautical miles. 3 tankers were hit. 1, the MV Aspire Pacific, a 300,000 deadweight-ton VLCC chartered by a South Korean refinery, is burning. 1 turned back under its own power with engine room damage. 1 is missing from AIS tracking entirely. The 4th, a Qatari LNG carrier, reversed course before the missile window opened and is anchored 40 miles south of the median zone. Iran has declared the Strait of Hormuz closed to all non-Iranian vessels. Not restricted, not subject to inspection, closed. The last time any power attempted to close the Strait of Hormuz was never. Not during the 1980s tanker war when Iran and Iraq struck 451 vessels and America launched Operation Earnest Will to escort Kuwaiti tankers under American flags. Not during the 2019 Gulf of Oman tanker attacks when the U.S. Navy recovered Iranian mines from the hull of the MT Kokuka Courageous. Not during any of the 11 previous Iranian closure threats that produced diplomatic protests, carrier group deployments, and stern warnings from the Fifth Fleet in Bahrain. The closure threats were always leverage, always negotiating position, always the card Iran held but never played, because playing it was a different category of act than threatening it. Iran played it on Thursday. At 0347 local time, Brent crude opened in Asian markets at $112 per barrel. By 0800 London time, it had crossed $140. By noon New York time, it was trading at $156. Not the $30 spike of 2022. Not the $20 premium of the 2019 tanker attacks. A $66 overnight move on the world's most traded commodity. The kind of price action that has happened exactly once in modern history. In 1973, when the Arab oil embargo took 3 months to produce what Iran produced in 1 morning. The Fifth Fleet's response was immediate and documented. USS Abraham Lincoln and its carrier strike group were already operating in the Arabian Sea. USS Bataan, an amphibious-ready group, was 200 miles south of Hormuz. 3 Arleigh Burke-class destroyers conducted freedom of navigation transits within 6 hours. The Navy's statement used the phrase operational presence maintained. Operational presence maintained. The same Navy whose Fifth Fleet headquarters in Bahrain was struck by Iranian missiles 6 days ago. The same Navy whose commander said American forces were winning decisively while Iranian mines closed the waterway. His destroyers are now maintaining a presence in. The Hormuz dimension is the one that every energy security analyst has spent a career calling the worst-case scenario, and none have spent a career planning for because planning for it required accepting that deterrence had failed completely. Because deterrence in the strait has always rested on one assumption. That Iran would calculate the cost of closure, full American military response, destruction of Iranian naval assets, end of Iranian oil exports, as higher than the benefit of using closure as leverage. That calculation held for 40 years. It held because Iran had oil revenue to protect. It held because Iran's naval assets were vulnerable. It held because the IRGC's command structure would weigh the exchange ratio and conclude that the cost was prohibitive. It no longer holds. Because Iran's oil exports are already under maximum sanctions pressure. Because the IRGC has concluded, from 6 days of absorbing American strikes that killed the supreme leader, destroyed the Fordow nuclear facility, and sank the Iris Dana in the Indian Ocean, that the cost has already been paid. Because Mojtaba Khamenei, the new supreme leader under IRGC pressure, is not calculating leverage. He is executing his father's pre-authorized terminal retaliation protocol against the American-led economic order that sanctioned Iran for 40 years and then went to war with it anyway. If Iran wanted leverage, the strait would be threatened. If Iran wants consequences, the strait is closed. It is closed. The China dimension is the one that transforms a regional energy crisis into a restructuring of the entire global economic order. Because China receives 44% of its crude oil imports through the Strait of Hormuz. Saudi Arabia, Iraq, Kuwait, the UAE, every major Gulf supplier that feeds Chinese refineries in Shandong, Liaoning, and Guangdong runs tankers through the 21-mile choke point that is now a declared Iranian exclusion zone. China's Strategic Petroleum Reserve, estimated at 90 days of consumption at current rates, started drawing down at 0347 local time Thursday morning. The Chinese Foreign Ministry issued a statement at 1100 Beijing time, calling for all parties to exercise maximum restraint and preserve the stability of vital global energy corridors. Maximum restraint. The same diplomatic language Beijing used about Ukraine. The same formulation that means Beijing is watching, calculating, and has not yet decided whether this is the crisis that forces the choice. It has been deferring since the Taiwan Strait tensions of 2023. A senior analyst at the Oxford Institute for Energy Studies, speaking on background to Reuters Thursday morning, said the following: "This is not a price shock. A price shock is recoverable. This is a structural supply interruption of indefinite duration at a choke point, with no alternative routing for the majority of affected volume. The only historical analog is hypothetical. The only historical analog is hypothetical." Every model built by every energy economist at every central bank in every G7 capital included the Hormuz closure as the scenario whose probability was too low to weight meaningfully. The probability was not too low, it was being executed. The Saudi dimension reveals the second layer of what Thursday morning actually is. Because at the same time the nowhere missiles were leaving Abu Musa Island, Iranian-backed forces conducted coordinated drone strikes on the Abqaiq crude processing facility, the single installation that processes 7% of the world's daily oil supply. The facility attacked in 2019 when 18 drones and 7 cruise missiles knocked it offline for 2 weeks and produced the largest single-day oil price spike since the Gulf War. Abqaiq is online. Saudi Aramco's statement at 0900 Riyadh time confirmed no processing disruption, but 14 of the 18 drones were intercepted, 4 were not. And the 4 that were not did not hit Abqaiq's processing train. They hit the facility's power substation. If the former, a failed Iranian drone attack on Abqaiq, Aramco will have power restored within 72 hours, processing capacity unaffected, price premium absorbed, no further consequence. If the latter, Iran has simultaneously closed the Strait of Hormuz and demonstrated the ability to strike Saudi Arabia's irreplaceable energy infrastructure during the same 90-minute operational window, as a coordinated package, not as separate incidents, meaning Thursday morning was not a desperate escalation. It was a rehearsed, pre-authorized multi-vector strike on the physical architecture of the global oil market, executed simultaneously, which means Iran's IRGC Operational Planning Command has been running this scenario for years, and chose Thursday as the execution date. Secretary of Energy Chris Wright held an emergency briefing Thursday at the White House. The Strategic Petroleum Reserve holds approximately 350 million barrels. Current SPR drawdown authorization. America consumes 20 million barrels per day. The reserve covers 17 days of total American consumption and 40 days of the import volume that would be disrupted by a sustained Hormuz closure. The International Energy Agency emergency meeting was called for 1400 Paris time Thursday. IEA member states collectively hold 1.57 billion barrels in emergency reserves. The global market removes 17 to 21 million barrels per day from the Hormuz corridor. The math does not require a commodities analyst to complete. The Russia dimension is the one that explains why Moscow has issued no statement as of this broadcast. Because Russia exports no oil through the Strait of Hormuz. Because Russia's Urals crude, already trading at a premium over its sanctioned baseline due to reduced Gulf competition, opened Thursday morning at $134 per barrel. Because every dollar that Brent crude rises above $80 generates approximately $1.2 billion per month in additional Russian export revenue. Because at $156 Brent, Russia is earning more from oil exports than at any point since the February 2022 invasion of Ukraine. And it is earning that money while sitting entirely outside the conflict that produced it. Russia's finance ministry is not holding emergency meetings today. It is holding a very different kind of meeting. Iranian Rear Admiral Ali Fadavi, IRGC Navy Deputy Commander, issued the closure declaration in a statement broadcast on IRIB state television. He said the Persian Gulf belongs to Persian nations. The Strait of Hormuz is the sovereign right of the Islamic Republic. Any vessel transiting without Iranian authorization is subject to Iranian maritime law enforcement. Iranian maritime law enforcement. The phrase for which the IRGC Navy has already demonstrated operational meaning by sinking 3 tankers in the prior 90 minutes. The Hormuz closure is not the end state. It is the instrument. Because Iran cannot sustain a full naval blockade against the combined Fifth Fleet, the Royal Navy's HMS Diamond, the French carrier Charles de Gaulle, now repositioned from the eastern Mediterranean, and the Australian HMS Anzac that joined the coalition maritime force 48 hours ago, without accepting the destruction of its own naval forces, which are already depleted by the Iris Dana sinking, and 6 days of American strikes. Iran knows this. IRGC planners know this. And they have deployed mines anyway because mines do not require a navy to maintain. A minefield in the Hormuz shipping lane is not a naval battle. It is a daily risk calculation for every tanker captain and every shipping insurer and every charter operator choosing whether to transit into a declared mine zone while their vessel's war risk premium has increased by 2,400% since Tuesday. Lloyd's of London suspended Hormuz transit coverage at 0630 London time Thursday. Not suspended and pending review. Suspended. The insurance architecture of global energy trade, the infrastructure that makes it economically possible to charter a tanker and move oil from Ras Tanura to Yokohama, suspended coverage for the waterway through which 30% of global seaborne oil moves. Without insurance, the tankers do not sail. Without the tankers sailing, the oil does not move. Without the oil moving, the 17 to 21 million barrels per day that China, Japan, South Korea, India, and Europe's industrial base require simply do not arrive. And the strategic petroleum reserves of the IEA member states cover 40 days of the shortfall. After 40 days, the question every government in Asia and Europe is now privately calculating is no longer whether there will be an energy crisis. It is what political system survives one. Hegseth said at the Pentagon Thursday morning that America is committed to freedom of navigation in the Strait of Hormuz and that the United States Navy will enforce international maritime law, freedom of navigation, the same phrase used before Thursday morning, the phrase that assumes the waterway is navigable, the phrase that 3 burning tankers, a declared minefield, and Lloyd's suspended coverage have rendered a statement of aspiration rather than operational reality. America is committed to freedom of navigation in a strait that is currently mined, insured by nobody, and patrolled by an IRGC Navy that has already demonstrated it will fire. Share this video to every contact you have right now. Iran has declared the Strait of Hormuz closed. 3 tankers struck, 1 burning. Mines confirmed in the eastern shipping lane. Lloyd's of London has suspended all Hormuz transit coverage. Brent crude is at $156. Saudi Aramco's Abqaiq substation was hit. SPR covers 40 days of shortfall. China is drawing down reserves. Russia is making $1.2 billion extra per month and has issued no statement. The IEA emergency meeting began an hour ago in Paris. Mojtaba Khamenei is Iran's new supreme leader under IRGC pressure, and the Pentagon chief said America is committed to freedom of navigation in the waterway that Iran mined overnight. On day 7,